All right, so Alexandra, you and I have worked together in the past, and you did such a great job taking care of the client. I really appreciate your communication. But when we were talking recently, you mentioned some things about financing, like a second home, or if you have a parent that needs to downsize and, they've got all their equity tied up, or potentially they don't have money in the bank, so yeah, exactly. Mm-hmm. So talk to me about some financing options for someone who is helping their parent downsize out of their current home.
Yeah, that's a great question. Actually, I can speak from experience. Recently, I helped a client. He was relocating his mom from Pittsburgh into Columbus. Mm-hmm. She needed a zero threshold condo, all of that stuff, but they didn't want to go through the hassle of having to sell her current home and then buy this one, home sale contingency. So there's actually a conventional loan program that allows somebody to put 5% down on behalf of an elderly parent, a young child who can't, college student, something like that, who can't support the mortgage on their own. Mm-hmm. And the way that we do the mortgage is we would just consider the person on that loan a non-occupying co-signer.
Which is interesting because a lot of loans, they have to be the occupant. Mm-hmm. But there's an option for that.
Yeah, and it's still considered a primary residence.
Nice.
So the pricing is still pretty good because it's a conventional loan, minimum of 5% down, primary. Yeah. And I mean, really and truly the best of all worlds if you're trying to move a parent closer and don't want to have that home sale contingency.
That's awesome. Because also, even from the home sale contingency, from my perspective, also, it's an easier transition for someone, that they can actually be moved before they have to, worry about getting their home ready.
Well, and exactly to your point in this case, his mom had lived in this house for decades.
Yeah.
There are memories in this house that take time to go through. You don't just box them up and ship them off.
Right.
Exactly. Right. And so I texted him after the transaction had closed. Here of her home.
Too bad Alyssa's not in Pittsburgh.
You probably needed it. That's for sure.
Wonderful. Well, okay. What about a bridge loan? Mm-hmm. How do bridge loans work?
Yeah. Absolutely. So a bridge loan will help remove the home sale contingency. And I would say that this could be an option for maybe the person downsizing who actually does maybe make enough income to buy the home. They don't need the cosigner. And we can do a bridge loan. I believe it's up to $750,000 with 4 months of no interest payments.
No interest. Mm-hmm. Wow, that's an interesting bridge loan.
Well, it is, and it's a proprietary product at Cross Country Mortgage. It allows you to take out the bridge loan, put the down payment on the home, remove the home sale contingency. Now, obviously, you need to sell that home within the 4 months.
Yes.
Pay off the bridge loan.
But it's a seller's market, so it's not too hard to do.
No.
I mean, if it's priced right,
So the bridge loan allows them to remove the home sale contingency, but they just have to sell it before that 4-month period elapses.
Okay, well, that makes a lot of sense, especially in the seller's market.
Absolutely.
It makes it easy if you have the home priced right, the right marketing, and of course, the right agent.